S&P 500 obviously is our most important metric if you think about it. But second to that is the crypto markets.
Of course.
Clearly crypto is absolutely booming. So since we chatted last time, I think we're probably about 40% above in terms of traffic that we used to have. And
wow,
continues to maintain itself. But, fingers crossed, who knows? Next thing you know, there's a flash crash and people disappear.
So everybody who's watching this knows TradingView, so we're not going to go into what the platform is, but there was a record amount of retail traders that entered the markets since COVID. And that's created a lot of shifts in the actual liquidity side of markets, but also in the tech startups. How has that impacted TradingView? And how have you guys seen the growth in the retail space past few years?
Yeah, I mean, it definitely has changed the blend, if you will, of who's involved in financial markets in general. But different sectors of the market have matured, if you will. Mm-hmm. Whereas otherwise, some have essentially dried up. One really interesting fact that I was actually learning about the other day is that most of the OTC business in the equity world has essentially dried up versus previous kind of waves or generations of, say, meme stock mania or things like this. A lot of that flow has actually shifted into cryptocurrencies. So these kind of new projects that have no regulator, no financial backing, no revenue or anything like that. All of a sudden, they are able to launch projects into the market and create overnight insane amounts of personal wealth, even though a lot of these projects have no financial means whatsoever. But that is the nature of crypto. It's kind of like the new casino, if you will. And as a result, you see this kind of seismic shift. So that's a huge one we've seen, is kind of this move from low cap companies in traditional markets into crypto in general. Now, on the mega cap side of things, things have not changed whatsoever. And in fact, more and more, there's a huge wave towards passive investing versus active investing. So this has been obviously funded by a lot of the majors. So BlackRock, Vanguard, iShares, State Street, and that continues to this day. And we really see that actually impacting markets when it comes to repricing stocks during market close versus next day, because ETF managers have to rebalance their books, and ultimately there's a lot of flow trading around ETFs now versus, say, more traditional markets. So there's a couple big seismic shifts happening, but safe to say, I mean, across the board, numbers are up. And, I think Reddit's IPO is actually very much a signifying moment of time, which is meme stocks, social investing, and people just chatting about markets is very, very in vogue right now. And as a result, you see somebody like a Reddit going public and, being up 70% in the first day of trading, and then like another 60% in the second day of trading. It just goes to show there's a lot of appetite for this stuff, both on the institutional side, but for sure on the retail side as well.
Well, first, I think Reddit is lucky because they have a huge support network. They have an army of people that will pump the stock as a meme. So I think that's a very fortunate position to be
built in, totally.